Okay, welcome back once again. We are back to the business. This is just a weekly trade recap. We had on card JPY and Aussie card, and let's just do a very quick rundown from the daily time frame. So on the daily time frame, let me move this to the 4 hours. So on the 4 hours, this was actually where we started the week, and we had to rated this level, had to clear off this imbalance here, and we'll flee up from this very level. And actually, before that, we had this equal high over here on the 4 hours. So we had to take up the level. We take up this level, and we had some nice fundamentals on the Canadian dollar this week. And this served actually as a very nice flip zone. This is the 4 hours time frame actually. So this is a level of interest, so to say, equal high flip zone, and we got above this level. We had to watch the break and retest strategy come into play, owing to the Canadian news that was actually to some extent positive. So we flew all the way from this level up, and there was actually some nice trends on the Canadian dollar this week. And on this very level, we had let me take off this first because this is actually a, a nice trade with a risk to reward of 9. So on this, let me remove this. Okay. Or should I take it? Let me just remove it entirely. Okay, go off. Wow, I've taken it off. So we had a 15 minutes PUI resting on these this flip zone. So we took our entry right from that very PUI, because if you watch what I noted here, there's a 4 hours demand zone actually above that equal high, resting that same flip zone where the support became resistance. And we had a 1 hour demand zone here, and above this very level here we had a daily supply zone. We took out that level, and we still went up. Actually, there was no reason for the market to actually reverse, because we're actually trading against the Japanese yen, and you know what that means when you are trading against the yen with such a nice currency like this, owing to the concept of risk on, risk off. So let me still go on. We went to the 1 hour. Let me actually give us one or two recap on how we got through this trade on the entry. If you watch these, let me take this in. Actually, I entered around here, so around this very point. This is a 1 hour demand zone. This was a 1 hour demand zone, and the moment we created this very imbalance after this very demand zone here, which was so valid because of the impulsive move, price came down, retraced into that very level, and I think I added some extra orders at this very point during the retrace, though it was quite expected, and price went up in that very direction, and even up until the very close on Friday night, there was no reason for the market to still reverse. So let's see what next week is gonna hold. Basically, I took this very trade for several reasons. If you look at the daily time frame, we're getting close to a lot of things. We took out the daily supply level or supply zone, and price rose above the 4 hours level. We took away the 4 hours equal high. That's a level of liquidity we are quite interested in. We had our reasons to take the trade from this level because of the break and retest. Set our stop loss below here, and we kicked off from that very level. So the basic concept that prompted this trade, supply and demand level. We looked at the concept of liquidity where others may be lying in the market. What's the fundamental doing, and what's the fundamental like that actually sponsored this move? That's why, to some extent, it's nice having nice idea about technicals, your system of approach in the trading game or your game plan. But it's nice having interest or knowing what the fundamentals behind these very currencies looks like. Yeah, so I don't think that there's anything much here because the trade was quite simple. It was quite simple. It was quite simple. If you actually in the 1 hour, okay, let me take this to the 15 minutes so you will get some pictures clearer at this very point. Okay, there's the 15 minutes. This is actually the very impulsive move, very impulsive move, and we retraced back into this move, and from this level, the market went high. So that's it. The other pair I traded this week was AussieCAD. So let's quickly rush into AussieCAD. Let me take this 34 hours so we'll see some things clearly. Don't mind the lines. I don't actually trade this. It's just for control. Yeah. Just so this is what the 4 hours looks like. And let me quickly jump to the 1 hour so we can gain some clarity. The risk to reward is 4. 4 is just we risked 1 and we were risking 1% and we had like 4% in return. So risk to reward here it is. Let me remove this. So, but take note of our point of entry. We entered somewhere around the 30 minutes order block. Around the 30 minutes order block. So this is how it went. I was actually interested at this very point because the Australian dollar was actually strong, owing to all the pairs, owing to correlated trading. If you saw what the Aussie dollar did this week, in most pairs that is actually related with to it really did something strong quite well. They released lots of data. It was actually high impact and it was actually positive, and it favored the whole thing. Let me don't go to that very aspect now. But for now, let me just quickly. So let's just look at this now. These we're actually at this level. These are 4 hour swing high. My chart is always properly charted. The market fell from this level. These we had a 1 hour order block resting this very level. So though we've not approached it, but maybe by next week we might get into this level. But for now, I don't have any reason to short the pair. There is no reason to short the pair owing to price action. So want something to be clear enough, a clear price action, a clear move that will be indicating that the market is about to reverse. Only at such points are we going to take the short position. So for now, let's just see what we did. When we rose above this 4 hour swing high, there was a break in market structure. A break of structure. So we don't just jump into the market after the break of structure. We want to see what's the move after the break of structure, how impulsive those moves were. So after this break of structure here, the market went so high to this very level here. Got into this the shaded green implies there's a 15 minutes. There's a 15 minutes order block on that level. There's a 15 minutes order block. A supply zone. Yeah, on this very level. So we actually watched the market, got into it, retraced, went some few pips high, came down, some few pips high. I could remember I shorted this trade. Yeah, I shot this very trade and quite some peep. We took quite some peep and then we went into this very order block because I'm very much interested in this very order block that sponsored this move. above this 4-hour swing high, you can go into the lower time from like the 15 minutes, the 5 minutes to actually see what happened here. The way we refined some entries. So this long wick here, this long wick, let me zoom in a bit. Okay. This long wick here is an indication of another block. There is a zone resting inside this wick that is primarily responsible for this big move, creating this imbalance. So the market got into this 15 minutes supply zone and it retraced, white retrace, created some equal low here, and indicating liquidity whatsoever. The market tried to create liquidity whatsoever they like to call it. But now that's not my interest. I'm not trying to define terms here. We'll put into that very level. If you go to the 15 minutes, let me take this into the 15 minutes so you actually take note of what really happened on this very level. Okay, this is it. We quickly got into this 30 minutes order block, and the moment we got into this 30 minutes order block, we went high, we broke above this level, indicating that the bulls are back into the market, and then we had to set some orders here on this very zone. There is a strong demand zone with a nice push and impulse after this very candle. So the market quickly dipped into that very demand zone and went up from this very level, and this was actually quite a nice move because the market went up. It did not respect this very supply level here. This is a supply zone. The market didn't respect this supply zone. The market just broke above it, indicating buyers are still in the market. And we took profit somewhere around here. We took profit somewhere around here. But from the look of things, from what I'm seeing here, from the 15 minutes to the 1 hour, is still indicating that the bulls are still in charge. So next week, I'm still going to be looking at this pair, looking for reasons to enter long. I will actually be looking for reasons to enter long into this very pair. So as simple as that, as simple as it may appear, I keep saying something. Don't keep it complicated. Keep it as simple as much as possible. Don't be carried away by the terminology or the jargon. I was actually saying those things are Forex jargon. The only thing you need to know is just be aware of what is happening inside the market. Yeah, I just be aware of what is happening inside the market. I will coming up with a video on how to take profits, and that's going to help a lot of times. You know, when you secure your entry right, you secure your stop loss right, the next thing you need to learn how to secure is your profits. So what level are you going to be interested in when taking your profits? You see, don't be greedy, don't be fearful. There are lots of fears that traders battle with, but forget about it all. Most times you're not going to leave the market with all the money. You will leave some on the table, and sometimes you might miss some move. But however it is, know when to enter, know what you want to risk, know when you have to take your profit. Forget about what happens after it. Yeah, even when we took our profit on CAD JPY, the market still went up. Like there was some massive pips even after that very move. Even to me, 10 pip is quite massive. 20 pip is massive. Why? It's not actually in the number of pip, because someone somewhere might take a 10 pip and still leave the market with a $500. Someone somewhere might still take a 50 pip and still leave the market with $30. So the problem actually is not in the pip, is in your risk management, your strategy, your approach, how you want to balance your book, how fair is your equity curve doing, and how you are playing in the market so well. Remember, everything still boils down to speculation, but it's not just a careless thing. It's an intelligent speculation and a risk that is properly managed, guarded, and intelligently calculated. All the same, this is me still wishing you the best in this FX trading. Keep it simple as much as you can, and you see yourself reach your goals. Thank you.